All right, I think we're about to be live. All right, we are live now. So everybody should be able to see us.
Mhm.
And I'm just confirming. So if you are tuning in, if you can let us know that you can see us, that would be very helpful, and that you can hear us. That also would be helpful. We are going live. It's Leon Noble and Brent Simpson coming to you all. We had a great turnout last week when we talked about the market. I mean, it was over 80 plus responses. We received direct messages days after. Actually, we're still receiving direct messages. So we know a lot of you all have questions about stock market, how it works, how definitely to play it right now in this COVID-19 environment, and where's money safe? Where is it risky? How do I make the most? How do I save the most? How do I protect the most? There are a lot of questions around just what to do with your money in the market right now. Leon, what kind of questions were you getting after a result of our last live?
It centered more. It centered. It was actually more around the tools to use to invest. Things like Robinhood, TD Ameritrade, E Trade, things like that. More basically how to. I mean, it seems like a lot of, which I'm surprised about. It seems like a lot of people aren't even in the market, or if they are, they don't know if the tool they're currently using is the best one. So that was a lot of the questions I was getting.
Yeah, so if you all have questions today, we're going to be talking stocks and we're going to be talking investing. Investing Education Academy, every week we do this. We're coming a little bit closer to having our live platform, which is going to be our membership site and really where we're diving into stocks. We're going to be talking to people about, what investments we think are good, how to figure out what platforms to use, what are the comparative analysis to the platforms. And it's going to be a number of opportunities to have tutorials and live Q&A with Leon and I. And so for those of you all who are watching this for the first time, we're going to be talking about stocks. And the reason we're talking about this in this short abbreviated introduction, Leon and I have been friends since we were 9 years old. I'm 43 now. And, you do the math. And in that space, we started investing in the market when we were 15. And we learned a lot about how to actually make money in the market and what it means to be an intelligent investor. And so we want to bring all those unique learning lessons to you all. And last week, we got a lot of great questions. We asked that if you can, please share this now with your community, with any person you think would benefit from it. And while I gave you an introduction of us, Leon, if you can give us a quick introduction for those people who are watching us for the first time of yourself.
Yeah, so my background is in IT. I worked for Accenture and Booz Allen for close to 15 years between the two. Then left there. While I was working, I was actually trading and investing at the same time. Eventually, started to make more money trading and investing versus my job. So ended up leaving at quite a few years ago. Been trading, investing ever since. And one thing, like Brent said, that we've learned a lot in the market on how to make money. Importantly, we also learned a lot in how to lose money. And what I mean by that is, one, how to handle it, and then two, how to mitigate losses. And to me, that's the biggest. To me, I mean, all investing is about risk. It's managing risk. And the biggest things I've learned the last 10, 15 years in investing and trading is how to mitigate risk and then how to handle loss once you do lose, because we all lose. I mean, no trade or investment is 100%. So yeah, back to me. So yeah, IT is my background. Been trading and investing ever since I left my job a number of years ago. And like I said, Brent and I have been friends for 30 some odd years. We've been in the markets since we were in high school. Learned a lot, made a lot of money, lost some money too. But that's what we want to bring our experience to this group.
And so, we talk about the fact that lose money, we talk about it a lot because some people right now in this environment think wherever you put your money, because the market's so depressed, you're just going to win. That's not the way the market works. And, you all have to understand you still need to make intelligent decisions on how you invest your money, because depending on what you do and how you invest, it can really be a painful situation on the other side of this because the assumption was this was the win. I took out some loans to invest in this market, similar to what happened with the cryptocurrency marketplace. When it was the big boom in Bitcoin, particularly, people were taking out home equity lines of credit to like jump in because they felt like this rocket ship was going to keep going up, up, and up. And when they realized that it didn't, and not only did it not, it crashed, and they didn't put a parachute in that thing to locate it. Like mental health became an issue, suicide rates went up, people losing homes, marriages were broken up. So we thought this was a very timely time for us to stop just talking to each other about the market, because we knew so many of you all, had questions, and we were like, you know what, let's start answering them. And
let's open up to everybody else. Yeah.
And so this is the platform where we're doing that. We're actually saying we're going to open this up to some people, and we're going to pretty much see what it is you have questions about and answer it if we can. So from last week, Leon, I know we didn't discuss this, so this might be putting you on the spot. You gave me a statistic on the amount of people like sharing in our increased reach. Did you still have access to that or no?
Yeah. So last week, the video. So full disclosure, I'm a data nerd. I love statistics and I love numbers. And so I track kind of the analytics behind how our live did. And last week, by the end of, so we went live last Wednesday. By midday, or was around 5 o'clock, we had 157 views. And then just this morning I checked and we had 325 views. So we more than doubled our initial day views over the next week, which is great. Which shows that, a lot of people were sharing, either via tagging or actually sharing it on Facebook or via email or social media. So we definitely saw a huge increase from our first day of the live over the next week, which we really appreciated. And which shows that, the information we're giving is, y'all are finding valuable.
Yeah, and so that's what we want to do. We want to provide value. So today we're going to do what we always do. We're going to have 2 stock picks for you all at the end of our discussion right now. One Leon picks, one that I pick, and we talked about it last night. And at some point in the future, we're actually going to create a brokerage account inside of the member platform that is going to be the company's brokerage account. And we're going to share all of our investment. We're actually going to journal our investment journey monthly, breaking down our own portfolio, what we're buying, we're selling, why we think certain things are running, why certain things fell off. And, our goal is to provide as much content and much value for you all to see. This is a living, breathing beast. And I'm gonna call it that because the market isn't something that just goes in one direction and stays in that direction. It goes zigzag, it goes up, it goes down. And the more you know about the market, the better off you'll be. We've already had 10 plus people ask to join the network, and we haven't even fully created it yet. And so that's great. And we've gotten calls from Jamaica, Puerto Rico, Canada, Africa, and I think those were in one was, I think it was Czech Republic. And so this information, although we're talking about the US marketplace, it resonates clearly because people are, inquiring across the world about what we're talking about here. So this also gives you guys a great platform to ask. Now, with that being said, we're going to dive into today. Now, Leon, did you want to kick it off? You want me to kick it off?
I just want to say one other thing about what you just said about the brokers. So another reason, like Brent said, what we're going to do is we're going to open an account, and then we're going to track. It's almost going to be like almost like an index fund for ourselves. Basically, what we're doing is we're going to actually invest in these particular stocks, and we're going to track them daily, weekly, and monthly. The reason we're doing this is for transparency. If you all know, it's online, like a lot of the gurus who are out there saying that they know this and they know that, and they never lose. You never see their account, right? They never show you like their actual account. They'll tell you after the fact what they did and how much they made, which is
or they give you that snapshot of a good day.
Yeah, of a good day, right.
Yeah.
There's people I follow online. This market was down 35% at its low. I saw people during that time posting how much they made. They've made this much. They've made 20%. And I'm like, okay, you found the one stock out of the whole S&P 500 that was up 3, 4, 5% today. Okay, I really, and you bought too many shares of it to give you this huge gain. Like, okay, you had clairvoyance and you saw the future, right? It's such BS. So one of the things we're doing is we're looking, like I said, we're going to have an account that we're going to track daily, weekly, and monthly as transparency to show what works and what doesn't work. And we'll actually go through and discuss things that actually went well and things that actually went bad, and why those things happen.
Yeah, and in that space, the reality is, the reason you call it a fund is because inside of a fund there are certain stocks that go up, and it's supposed to mitigate and spread out the risk of the stocks that are going down. So the up and down dance is always happening inside of a fund. So that's not to say you can't possibly find that one that's a 400% run, but then there's two that got delisted because they couldn't maintain their books. And so, do you even know when we start talking reverse stock splits, or why a stock splits, and why you would do a reverse stock split? We're gonna go into that in detail, and for you all who are interested in kind of becoming a part of our community early, if you search Investing Education Academy, we did create a Facebook group, and to get in. There are a couple questions you got to answer, but we are going to make it open to the public. It's private, but we decided last night again to make it open to the public. So if you're watching this and you go to Facebook and you look for Investing Education Academy, please join our community. What we said we're going to do is we're going to have a Saturday. What do we call it?
So was that Saturday hot? What's it called? Saturday hot seat?
Yes, I think it's a Saturday hot seat in my little book. Let me check. So in the hot seat Saturdays. Yes.
Hot seat. Yeah.
So we're actually going to put ourselves in a hot seat on Saturdays inside of the Investing Education Academy Facebook group, and you can just access whatever investing question you want. Now, again, the goal and the purpose of this is to focus around stocks, but it's not a stock. It's about stocks. It's about investing
and the market in general. Yeah.
So for those of you all who maybe don't know the history of the market, it might be a place to ask us a question on the history of it. We will not have all the answers, but we will do research to get answers back to you all. In addition to doing the research to get answers back to you, I'm pretty sure you're going to learn some tidbits from us along the way, because we've been doing this for quite some time. And our goal isn't to come to you all to create the perfect environment. We're coming to you because we like you. We've been in that place where somebody invested our money for us. We went to a bank and they said, "Oh, this is a great CD." And for those of you all who have CDs in the industry, those are considered certificates of debt. When you go into a bank, they're considered certificates of deposit. And even talking about you could touch on it, Leon, real quick. When we discussed in the inflation rate versus the rate that you receive in type of savings accounts and things.
Yeah, I mean, we're going to have a deeper discussion on this, but Brett and I were talking last night how the savings account is literally the worst place you can have your money around, even a CD.
For most people.
For most people, right? But and the reason being is that inflation generally runs at about between 2 and 3% annually per year. And as we all know, banks are paying like 0.0005% or whatever it is, 0.00 whatever. So anyone that has their money parked in a savings account alone is actually losing money every day that goes by, and every year and every month, because again, inflation is eating away at that money daily. So that's one of the topics that Brent and I are going to have kind of go a deeper dive into and actually break down some numbers, the law of 72, some other things. But yeah, I mean, it's to me and what's crazy is that, just off a tangent real quick, what's crazy is that, so I don't know if y'all know, but the Fed just lowered the Fed funds rate. Basically, that's the rate that banks borrow money for, and then they lend it to us at a higher rate. The rate is at 0. Like the Fed lowered the Fed fund rate. Huh?
I think it's like 0.02 or something.
Well, it's usually ranges between like 0.02 to like 1. So it's effectively 0. Their banks are borrowing money from the Fed at 0% essentially. And y'all noticed that our credit card rates are still 17, 20, 30%. Any sort of loan you go out and look for now, you're not getting. I mean, even mortgage rates, like the mortgage rate follows the 10-year Treasury. The 10-year Treasury rate right now is below 1%, but mortgage rates are still at roughly 3.5%. So I mean, it just shows you how the system is so it's essentially made for the rich, like for the little guy like us. Even though they can borrow at 0, they're still lending out to us at 3 and 4 times what the banks are borrowing. So bit of a tangent, but like I was saying, back to the point, yeah, if your money's in a bank account and you're not investing, you're losing money literally every day, because the rate that you're getting for the bank is way less than inflation.
Like you. Yeah, no, and in that space, when people start thinking, oh, the banks are at zero, they're borrowing money at zero, it must be also like that for us. It's not the case.
Right. Not even close. Not.
If you don't understand what that interest rate means for you over the long run, you could really put yourself into a predicament when you're going to acquire these really cheap loans. It's almost like predatory lending. But you know what? We can do this all day.
Right. Well, I was gonna say one thing.
Yeah.
So I've had people say it. So when I said that you're losing money in your account, you're not going to see, like if you have a $10,000 account and let's say inflation's 2%, at the end of the year, you're not going to be down 2%. So people get confused, like, oh, I'm not losing any money because my account's still at 10,000.
Your buying power.
It's losing buying power. So what you can buy at the beginning of 2020 is less than what you can buy at the beginning of 2021. So your account isn't going to actually lose value, but your buying power. Before you could buy 10 things of bread beginning of 2020, beginning of 2021, now you can only buy 8 things of bread. And that's what I mean by inflation. So don't get it confused that you're not actually losing absolute dollars, but you're losing buying power. You actually can't buy as much as you did prior.
Yep. And then for Bakari, thank you for sharing the video.
What up, Bakari?
Yep. It's actually a couple Springboard people on. Michael in Kentucky, thanks for watching. So now we're talking, what are you doing? What should the average person be thinking about right now while the market is here? Let's dive into that. Now, we pulled up an article, or Leon pulled up an article to talk about one aspect of an example, if you will. And we're going to try to dive into some case studies along these lives so you guys can get a real life example of some type of topical information about what's happening in the industry. So Leon pulled up an article on Carnival Cruise Line. And looking at Carnival Cruise Line right now, they've lost about 80% of their value in their stock. Now, most of us like, oh, 80%, that's the ship that's just about to crash. Get it? Carnival, ship about to crash. But the reality is there's a certain point where a company becomes too big to fail. And too big to fail means normally their money is tied into the economy. They have political ties. The number of employees that they provide a lifestyle for would actually hurt the economy if those companies went away. And Carnival, to us, would be one of those companies that have reached a point of being too big to fail. And Leon's going to talk about the article a little bit more.
Yeah, so Brenner, it's just kind of interesting. It kind of coincides with my pick. But so what I found was, just kind of reading my usually business articles, is that I found an article that showed that so there's things called sovereign wealth funds. And what those are typically, just think of those as investment funds by countries, right? So the way, you have hedge funds and you have mutual funds that invest, a sovereign wealth fund is typically the investing arm of a particular country. So in this article, it showed that Saudi Arabia's sovereign wealth fund just bought 8% of Carnival Cruise Lines. And so I wanted this kind of discussion to be about risk and reward. And so the question becomes, well, why do they buy 8% of Carnival Cruise Lines now? And the reason is primarily Carnival Cruise Lines is down 80%. Its high was at 50, and right now it's right around 11, 12. It's down 80%. We're talking about one of the big, so Carnival Cruise Line is the biggest cruise line operator on the planet Earth. It's currently discounted by 80%. So what Saudi Arabia's sovereign wealth fund did, they bought 8%, which translates into about $190 million, right? And so doing the math, I went through and kind of crushed it. And what I found was that if Carnival Cruise Line ever gets back to where it was at about $50, that would be a 400% return for Saudi Arabia's sovereign wealth fund. It would turn $190,000 into $190 million into $760 million, 400% return. So the risk reward there, and you also got to look at it as, okay, what's the risk? Well, the risk is, when the stock was at 50, there was more of a risk stock going from 50 down to 11, right? The stock going from 11 to 0, nothing's impossible, but it's a lot less probability, because that would mean that Carnival's going out of business, and that's not really the case right now. And they're a $3.5 billion company. They just raised, I think last week, they raised a $6 billion debt offering. to kind of support them through this, this whole virus situation. So Carnival's not going anywhere. They're
real quickly, let me jump in. You got to think about the other sublines that Carnival owns. So you're not even talking about just Carnival Cruise Line going under. All the sublines that they own, which is like Princess Cruise, I think Holland Cruise, there's a couple others. But then you got to think about all the toilet tissue vendors that they support. You got to think about all of the water manufacturers that they now support. You got to think of all the mechanics unions, not just mechanic shop, but the unions that depend on them to stay in existence so their union workers can have jobs. And you got to think about the sheet metal worker unions that actually provide sheet metal to Carnival Cruise Line. Do you know how big the Carnival Cruise Liner is? It's the size of like a number of skyscrapers together. So what we wanted you to think about when you're talking to us is deconstructing what's in front of you to understand the underlying parts. And so you're not just saying is, Carnival crashing. You have to look at all the economy that's created from Carnival.
That's around it, yeah.
So, all right, just wanted to throw that in.
Yeah. So yeah. Say what I'd say is that the risk reward right now is huge for Saudi Arabia Sovereign Wealth Fund. They have 190 million invested in Carnival Cruise Line essentially at the bottom. I mean, it's now $11. It's about, I think, got down to like 7. It's back to 11. So, like I said, for it to go to 0 would mean that the company's going out of business. The risk of that is very, very low. Now, the risk when it was at 50, the risk of it dropping, 20, 30% was a lot higher than the risk of it going to 0. So the risk right now for Saudi Arabia is actually pretty low. And the fact they just raised $6 billion in debt to help them, kind of through the struggle. And like Brent said, there's an ecosystem around them. So that ecosystem is also going to support Carnival in any way they can. So I just want to put that out there as showing the current risk reward environment that we're in. A stock that's down 80%. A lot of people out here right now are panicked and saying, "Oh my God, things are going to 0. The market's dead. It's never going to come back." We have one of the biggest wealth funds on the planet just dropped $190 million into Carnival at the bottom. Are they worried that's going to go to 0? Most likely not. They understand
information that we don't have.
Yeah, they have information that we don't have. Not that we can't get it, because insider trading, there's all information is out there. It's just how you out there going to get it. And of course they have hundreds of people doing research on these things. So that 190 million is relatively safe, but their reward can be can be 400 plus, 600 plus, 700 plus reward. But like I said, if it just gets back to $50 where it was before this crash, it's a 400% return, went from 190 million to 760 million in maybe 1 to 2 years. I mean, it's a huge opportunity, and that's the things that Brent and I are looking for in the market right now.
And we're going to try something real quick to do a screen share to show you the passenger capacity snapshot of past Carnival over the last like 10 years. We've never tried this before, so if we have a technical issue, we'll come right back on, but it should work.
Yeah, so what this graphic Brent is trying to share, it basically shows, because like last week, my pick was Delta Airlines. And the reason being, well, I gave a lot of reasons, but one of the reasons was that in 2019, Delta Airlines had its the airline industry in general had their biggest ridership in history of recorded airline passengers. So the airline industry is doing fine. It's just everybody's going through this virus slump right now. If you all can see the graphic Brent just put up, this is showing the same thing with the cruise lines. The cruise lines had their best year last year at roughly about 30 million passengers. And you can see from this graphic, it's slowly been creeping up every year. So the cruise line industry was in perfect health. Again, everything's being affected by COVID. Everything's being drawn down by this downturn, but you remove that, and there's no fundamental issue with the cruise line business nor the airline business last week. So these things that are crucial discounts are such a monumental opportunity to get things discounted 80, 90%. And this snapshot just shows the health that the cruise line industry is in outside of this virus.
Yeah. Now, as the figure shows, this is in the millions. So we're talking about 2009 and being about 18 million people. And then in 2013, it's about 21 million. And then in 2016, we're talking 25 million. And just up to last year, we're talking 30 million people. And the assumption is, let's say we don't get back to 100, because I don't think anybody's jumping on the ship immediately after this is done. But if you get back to your 2015 numbers, you're still at 23 million people now patronizing these ships. So when you look at charts like this, when you start thinking about the market, you have to think about, well, even if it doesn't get to 100, what is the downside to that? What if it doesn't get back to exactly where it was? It's still a win, because
Right.
we're talking about an 80% drop in the price right now.
You're talking, it's 80% drop. And you think about it, it's at $11 roughly right now. If it even goes back up to $20, that's 100% gain on your investment. So like I said, the risk reward of it going to zero, nothing's impossible, but it's a low probability that it would go to zero. But your upside is huge. I mean, just going from 11 to 20, 11 to 21, you're talking 100% gain. Like I said, if it goes back to where it was, 400% gain. I mean, it's right now the advantages right now in some of these discounts is just tremendous. I mean, we'll never see stuff. I mean, even the credit crisis in 2009, a lot of things didn't get this low. I mean, some did, but a lot. I mean, you have a lot more discounted now because again, we dropped 30% in 20 days. The last time the market dropped that fast was the 1987 crash. The credit crisis took about, I think, 2.5, 3 years for it to bottom. But we dropped 30% in 20 days in a month. So these discounts right now are things we haven't even seen before.
Yeah, and even with the credit crisis taking about $19.2 trillion out of our economy, we still haven't seen numbers as depressed as this market is right now. And so what that in our minds means is that there's a high probability that we won't see gains like what we're probably gearing up to see in the future. And the question is, how are you positioning yourselves? And again, we're going to give you guys two stocks that we chose, and that wasn't even one of them. That wasn't your stock pick, was it, Leon?
No.
Okay. So we haven't even got to the good stuff yet. So I mean, this is just research from other things. This isn't even what we're talking about for ourselves. So, if you have questions, and I'm following the live right now, we hope that we're either going to start this Saturday or next Saturday inside of the Investing Education Academy Facebook group. But inside of the Facebook group, we're going to be doing deep dives into some portfolios that we probably will pull up and just dissect. We'll be answering questions, and we want you all to put resources out there. I'm a part of a number of investing groups that kind of goes very deep into derivatives. We talk about pink sheets, real estate. We're going to be dabbling, talking options, crypto. The list is pretty extensive on what we're going to be discussing inside of that framework. We will do these lives because we want the forward-facing community to receive the information, but we're going to do the deep dives inside of our Facebook group. And the reality is, we wanted to figure out who the people are who are really interested in going deeper, that want to join our membership. And so, I mean, again, risk reward is what we're talking about. So is the risk of what you do in regards to joining our membership, is it low enough to, go for that reward that you'll receive from the information that we'll be putting out? In addition to that, we're going to be utilizing just the connection inside of our network to talk about how stocks are taxed. What happens when stock appreciates and you're gifted it? I mean, many of us, we've never been in a situation where many people watching this, there's some that are, but many people watching this never been gifted stock. And do you go back to cost basis? Is it, where do you start the tax base from? And so some people don't know what cost basis is. It's like, do you get a step up in basis? Is it original basis? Like, it's a lot of things that you have to know when you're starting to play the level we hope to get everybody to. In addition to that, we had a lot of questions about ETFs and how they work and REITs. So for people who don't know about REITs, which there are a lot of people who are trying to use REITs to hedge against what's the risk they want to take in the market, they think they're hedging by getting into REITs. And sometimes that's accurate, sometimes it's not. It depends on the REIT. And so we want you guys to understand how this works. And we're being completely transparent about how we're building people into our membership community. Because the reality is, we know along the way, if you guys get this information on the front end, you're going to win. It's going to benefit you to get even this conversation. If you join the Investing Education Academy members Facebook group, it's going to be more people talking about stocks. There's going to be more people talking about different investment opportunities, and that's the deeper level. But when you get into our membership platform, that's when we're letting loose. I mean, that's when we're going to have the courses. We're going to have a membership area. It's going to be pretty decked out. I mean,
We're gonna have guests on, speaking on different topics.
Yeah, and I think the biggest thing is that you're gonna get to see our brokerage account. Like we're gonna.
Excited about, yeah.
Yeah, I'm excited. I'm excited, but I'm nervous.
Yeah,
But
yeah,
because anytime you put yourself out there, you open yourself up to criticism and all things.
right.
And honestly, I don't care.
Is what it is.
Yeah, it's not. We aren't even going into this with the find out how we got double digits return. We've gotten triple digit returns, both of us, and we don't promote that because it's not the reality for most people,
Right.
and it's not. That's not what everybody should be going for. You should be going for beating the bank, because if you're not beating the bank, you're not beating inflation. If you're not beating inflation, you are losing.
Every day you're losing money if your money's just in an account, just in a bank account.
So that's what
that's a pet peeve of mine is people that just park the money in a bank account and leave it.
But it's the reality in this space is there are a number of people who went through the Great Depression who they have, and I said this last time, they have money in under floorboards, they have money in walls, they have money in pillowcases,
literally under the mattress.
Yeah, under the really, like it, because banks shut down at that point in time. You could not go to a bank and just open the door and say, you know what, I'm scared, give me my money. The doors were locked. You couldn't get in. So it was a different type of terror. In this situation, because so much of what we do is still digital, we still have access. But as you saw, they still shut down the market for a day. And they still put a stop loss on the market because transistors just couldn't handle the volume. There's still reasons to be educated. There's still reasons why it helps to have an advisor or somebody that's advising you, or a group that can help you understand the market so you don't panic. So things aren't abnormal. It's crucial in my mind. And so with that being said, let me see. How can you, the question is, Malcolm, what's going on? The question is, how do you anticipate behaviors such as the impact of cabin fever as a result of COVID-19, sheltering and quarantining on tourism? People need to get out. So some people's need to get out could, in fact, spike travel mode. I agree. And with the COVID-19 and cabin fever kicking in and people like, I just need to get out, I think that's true. However, I think the run to a boat isn't going to be where they run to. Cabins, Carnival's recovery is going to be slow and consistent. It's not going to be a boom. In my mind, Leon, jump in if you feel some way different.
I think it's the same thing. I think Carnival. So the reason, again, Saudi Arabia invested in Carnival Cruise Lines, dropping $190 million, wasn't a trade, right? Everyone knows that what we're going through right now is unprecedented. The markets and the economy has never been shut down all at the same time. Like during the credit crisis, which is the closest analog, the economy was open. The real estate market took everything else down, but it was a slow bleed. This happened literally overnight. Companies went from 50, 70, 80, $100 million of revenue a month to zero in like 2 weeks. And it's not going to come. And like you're saying, Brent, something like a cruise ship is not going to come back immediately because everyone knows being close and tight with people is how the virus spreads. So in the next, hopefully a couple of months, if not weeks, when they kind of loosen this up, people aren't going to run to a ship. This is going to be a slow grind. But again, you're talking about risk. We're talking about risk reward. If you're looking for a 100% return tomorrow, then something like Carnival Cruise Lines, which Saudi Arabia has invested a huge amount of money in, isn't for you. And actually what Brent and I do in general, we're not traders, we're investors. I do have some things I do on the side that are trading, but generally I'm an investor. We're looking, 1 year, 3 year, 5 years out, the same way these funds are. They're not looking for an overnight trade. So it's going to be a grind. But where else can you invest in something where you can get 100% return in a relatively small move from $11 to $20 for Carnival when it was previously at 50? So to answer your question, Mo, there's no answer to it. I guess I could say it's just a slow grind. We all have to sit back and wait, like any investment, wait for the recovery return. But the risk, the reward in this can be huge, 400% return, if not more, if it gets back to where it was, and above it.
So Mo just he just kind of uncovered what my stock pick for today is going to be, but I don't know if he knows he uncovered it, but it's true, very true. Even if it's 100% rate of return, that happens over a 3-year period, anybody watching this, you're still talking about an average return of about 30% per 33.333333% for the last 3 years. So even if it takes 3 years for it to hit 100% rate of return, where else would you have gotten a
30%, right?
And so, I mean, you start talking about, oh, well, it would not be just better off keeping it in the bank. No, no, because even if it took 3 years for it to get to 100%, let's talk about what that does. That means that every 2 years, your money's 2 to 3 years, your money's doubling, right? If your money's doubling every 2 to 3 years, but you put your money, you decide, well, I don't think everybody's running back to the cruise line. No one said they will, but we're saying it's still going to be a better return than other places. So you decide to stay in the bank. Let me tell you what happens if you decide to stay in the bank. You will get your 1%.
No, not 1%. 0.00001%.
Yes, yes. And so you're looking at, or you're going to run to a CD and maybe get one in a CD right now, maybe,
right.
And or you might go get a bond or a municipal bond or whatever from a state. You are looking at 72 years or more. I'm trying to look directly into the camera and say that. You're talking about 72 years or more for your money to double. Where we're talking about something that can possibly have your money double in 3. So right. Now you have to think about life expectancy. Like, how long do you have to live for your money to double? And we're gonna go into that on the platform. So I'm gonna pull myself back.
Right.
Now we got a question from Bakari. He says it's a lot of stuff when it deals with options, and he led with investing, options, stock, etc. That kind of, it's not in layman's terms. Now, this where I can say anybody that knows me or has worked with me in particular knows my background. I was a licensed broker for a number of years, over 10 years. I knew that any profession, and I've learned this, I don't care what you do, any profession has a certain group of terminology that if used, it makes you like a freaking genius.
Right. Right. Big words and shit. Yeah.
Or it's just words that are very specific to your industry.
Right.
And so we don't, Leon nor I do that. Like we talk in plain English most of the time. Like you heard me say REITs earlier. And I mean, I did that on purpose because we want you to come to our platform so we can talk about it more. So, but I mean, if you ask the question, it's a real estate investment trust. And that's just companies that invest in different forms of real estate to create a pooled investment that is perceived to be less risky. These things can all be made very simple if you have people that understand what they're talking about. Normally, when terminology stays above a person's head or is confusing, it's because the person who's talking doesn't know what they're doing.
Right.
Because there's nothing, there's no industry out there that if a person wanted to, they couldn't use plain English for anybody to understand. And I've always been a proponent, if you can't explain what you do to a third grader, you're not good at it or you don't know what you're doing. And those really are one and the same. But in another one was great point about the cruise line and in the hotels and paid parks. Now let me talk about the hotels. And so I'm just gonna give my stock pick right now. It's Marriott, right? And I'm pulling up a chart. I chose Marriott right now. In December of 2019, Marriott was trading at $152 a share. Marriott is now at about $81 a share, and they've already experienced a $30 per share increase since April the 3rd. So in the last 5 days, if you had owned 100 shares, you're talking about $3,000 come up if you would have owned 100 shares. And so, and they're up $7 today. I've loved Marriott when it hit because if Marriott gets to even close to the 150 range or the 140 range, you're talking about like the 80% increase in revenue. The thing is, I don't necessarily think Marriott's going to have a slow recovery. Marriott has similar to Carnival, they have a number of brands. And some of those brands are hotels that are designed not to be so close, not to be close quarters, if you will. In addition to that, now, from a government funding standpoint, there's a lot of government entities that are trying to get people housed at various locations throughout the country, and they're turning to hotels to write them the check just so they can house first responders, so they can house some of the sick in certain cases, and that's not going to necessarily stop anytime soon. So they do have funding sources, and business is still happening. I mean, I know a lot of us may be, well, should be, in our homes doing the right thing by staying home. But then there are businesses that they're still moving, they're still traveling, they're still booking out hotels. And not only that, certain hotels, and Marriott is one of them, they've actually created a model where a portion of what they're doing is going towards senior living. And so there's some hotels that still carry the Marriott logo insignia, but they're using the hotels or a portion of it to actually provide senior living. And I'll give you an example of what I'm talking about. Some hotels may charge $100 a night for a stay, right? When a person has a long-term care need, it can be upwards of a $230, $240 a day for that care. So there are certain senior people who now have started buying like unrestricted lengths of time at certain hotels because they get their beds made. There's a continental breakfast every morning. There's a pool, and there's security on site. So they're actually utilizing these hotels as if they were retirement communities. And I think that trend is starting to pick up a lot of momentum. And for that reason, there are additional ways that these companies make money. Also, Marriott International is a big investor. They don't just build, they invest in land and property. So they're still getting appreciation on the land and property. And that was my reason for picking them.
All right. My pick kind of coincides with the article I talked about earlier. I chose a Norwegian Cruise Line, ticker symbol NCLH. And the reason being is everything I laid out before, that the cruise line had its best year ever last year, just like the airlines last week. And it's discounted by 80%. And also the financial behind it is that, so over the last 3 years, they're growing earnings or the profits per year at about 18%. Sales are growing about 9%. And they own 9% of the cruise line industry. Norwegian Cruise Lines does. Of course, they're not as big as Carnival. And there's a reason why I chose Norwegian over Carnival, and it's a whole deeper dive. We'll go into that on another live or another session. But yeah, so Norwegian Cruise Line is my pick. I got in at about $11. It's funny, when I got in, the week later it spiked up to $20, so doubled my money in a week. Now it's back down to about 11. And in this market, we're going to see volatility. We're going to see this type of volatility going forward until we're kind of out of this mess. But like I said before, I'm in for the long run. I'm using this kind of like what the Sovereign Wealth Fund of Saudi Arabia did with Carnival Cruise Lines. I'm thinking the same thing with Norwegian. It's a long-term play. I'm not looking to get out of this tomorrow. I'm not looking at this every week. Anytime I get into something, I think Brent is kind of roughly the same. It's a long-term thing. It's 1, 3, 5 years. And then if it gets back to, if this gets back to its high, roughly like Carnival, I'll make about 400%. If it gets back to half of that, I'll make 200%. If it goes up back to 20, I make 100%. And can it go to zero? Of course, anything can go to zero. The probabilities of that are very low because again, you're talking about a huge. I think Norwich is worth like roughly $3 billion. So
you see a company going towards zero. We should also state that it doesn't. You don't wake up and it's at zero. It was right. Like the descent to zero is very slow.
Right. Yeah.
It's not slow.
And you have to remember, like we said, these huge discounts are there's nothing fundamentally wrong with the airline industry nor the cruise line industry. As I showed, they're doing the best they were ever doing in 2019. Airlines had the highest ridership, and cruise line had the best ridership in history of recorded record. Everything's being affected by the virus. We all know that. Yep. So the fundamental and the structural nature of these businesses has not changed. They're doing great. It's just once we got to move past this issue of the virus, and everything will generally come back. Again, I'm like I said last week, I'm a fan of history. I love history. Use the credit crisis as an analog, or use the .com bust or the 9/11 attacks as another analog to show, things crash. But eventually, once the external effect of that event goes away, markets generally turn back up. Take some time. But again, I'm looking at a possible 400% return, possible 100% return on my money in the next however long it takes. But So Norwegian Cruise Line is my pick.
And you know, it's been a couple questions, and Vincent just he put up that Hilton currently has a campaign that they're trying to house 1 million nights for healthcare workers. And so, you know, the same way we're getting creative in our businesses, and the reason why you guys watch and share these videos, and I actually, please continue sharing it. We appreciate it. And the reason why we decided to make now the time, Leon and I have been investing for years. Leon hasn't worked a traditional job in like 8 years. He's been a trader. He's created a living trading. And I've been a licensed agent for like 19 years. I've bought houses with stock money and, or, you know, created the down payments in those places and paid off cars and motorcycles. And it's like, you know, you still go back to a place where some people have never really been in the market long enough to experience what it can do for them. And so we're not saying this is a quick fix. We're saying, no, become part of this community for the long run, because the same way we have to reinvent ourselves when we start to present this information, the hotels are clearly reinventing themselves. You are reinventing yourselves by being willing to listen to this live for 47 minutes and stick with us and share it, which our numbers are actually going up in viewership like right now. And so that's because we've changed, you've changed, hotels are changing, businesses are changing. The question is, how do you stay current with all the changes? And do you fear the change, or do you embrace it and benefit from it? And the close quarters, and Mo particularly, he asked a question about kind of close quarters businesses. I'll call them close quarter businesses. And this isn't even a part of what the live we were talking about today, but I'm gonna throw it in there. This is a bonus. Think about the companies that are creating ventilation systems that are going to revolutionize the way air is filtrated. And think about those companies now that are working on the gels or the mist that now probably will be used as cleaning agents versus the, you know, going through and wiping every surface. And so there are a lot of technologies that are being birthed out of this. Even the fact of anonymously driven cars? No.
Autonomous.
Autonomous.
Autonomous, yeah.
Yeah, driven cars.
Cars, yeah.
A lot of people aren't going to want to get in cabs with like a person breathing on them. And so
right.
that technology may get accelerated as a result of COVID-19. It's already exists, they're already on the road, but where governmental regulations may have stopped it before, they may accelerate it now. I mean, it's just a lot of things that we're going to be talking about in the group, and then even deeper in our membership site, that start deconstructing industries. I mean, how many of you all thought about filters? You know, how many of you all thought about what company is probably going to produce the best filters as a result of what's happening? Because I tell you this, when Carnival, Norwegian, or any of the cruise lines hit, they're going to be advertising clean air. Like, that's going to be part of their messaging. And to do that, they're going to have to improve their air ventilation systems.
And kind of like, and like you said, kind of like the industry around it. And this, you know, Norwegian was my pick. But with that, go look at a chart of Clorox. Okay.
Oh, yeah, that's crazy.
Go look at a chart of Clorox. Clorox, you know, Clorox is something that we deal with every day. You don't even think about it, right?
Clorox
it's kind of
a parent company, right?
Huh?
Clorox has a parent company, I think.
I don't know. No, I think Clorox is. I think they changed their name. The parent company changed their name to Clorox because the brand was so strong.
Okay, yeah, I knew they were owned. Clorox was a product of them.
Yeah,
okay.
But if you go look at the chart, they just hit their all-time high. Clorox was a relatively sleepy giant. It's a very, and again, this is my pick, but I'm just bringing this up because kind of what Brent said around the industries around things. Clorox hit its all-time high, I think, like last week. I mean, everything is down 30%, and Clorox is at its all-time high. Why? Because of what's going on. So it's things like that you got to think about. Like right now, I'm focusing on things that are just beaten down like crazy because I know eventually they're going to come back at some point. But if you're looking for return now, like Brent said, things that are benefiting from this kind of sad situation, things like Clorox, Amazon because of the deliveries.
But Amazon was climbing anyway, so you know. And
yeah.
just real quick before you go too far away from that point, I pulled up the chart and Clorox hit $179 a share March the 17th of 2020, which was their highest point in. I'm pulling their 5-year, and looks like their 5-year chart, that 179 was about their. I'm just making sure. Yep, about 179, 180 was their highest point ever.
Yeah, I think it's their all-time high. I think that's if you go back to like beginning, I think it's the all-time high. Yep. Mm-hmm.
And so we got another question asking, do we recommend stocks that are long-term plays for new investors? Discouraging frequent trading. I'm not discouraging frequent trading, or I'm not promoting long-term buying for everybody. It really depends on the investors and the investors' goals, and that's the advisor in me. Everybody's different, and what you want to look at is your suitability or your goals for investing. What's suitable to you? And also, are you playing with discretionary money or not? Like, I will hope that you are. And so, is this replacing your 401k money or your Roth IRA? All those things matter, and we'll go into it in further detail. And I have to say we have a hard stop today because actually I'm teaching stock education to a group of kids for attorney Beverly Winstead, and CPA Joy Sistrunk will be joining me, where we're doing financial education for kids. So we're doing actually a Zoom meeting at 1:00 with their nephews and our nephews and nieces and some other kids, teaching them what the stock market is and how they can get involved now. And I don't want to be late for the children.
And I'll just say on that last point about trading or about short-term, long-term. Studies have shown, this is something that I'll bring to the group at some point, but studies have shown, there's historical studies that show that literally the longer you hold an asset, the probabilities of it increasing go up almost exponentially the longer you hold it. So holding something, so looking for short-term gain, you're actually going against your own self-interest, because the shorter you hold something, the less likely you are to benefit from it, and the longer you hold it, the more likely you are to benefit from it. So I'm not a fan. I've done it. I've day traded, and it's high risk, high reward. You can make a lot of money, but you can lose a lot of money too.
Yeah.
And as I said, the longer you hold something, it shows that you actually have a higher probability of making money. So
yeah, in that space, you got to look at what's going to happen. And everybody, please listen to this part, and continue to share this video after we're done, because this is important information. It's not even just about us; it's important information. But we are growing a business. As you invest and as you start to hold out, there are going to be a lot of false runs in the market. It's going to be a lot of false runs where it's going to look like, okay, the worst is over, we've hit the bottom, and you're going to see something explode. But it's a high probability you're going to see it pull back. And so when you do invest, if you're investing if you understand why you're invested, commit to it and buy the right things to match that need. Because if those false runs start to happen, or the false drops, is emotionally going to rip a new investor up. Mm-hmm. And I'm not even talking about analytics or anything. I'm talking about the emotions of investing. When it's endorphins and dopamine is kicked into our system when we see these highs and the lows. It's similar to why cell phones are so popular. It's not just instant access. It's dopamine hits when the phone rings or vibrates. We feel important. We feel
people get those likes.
Yeah. It's all dopamine hits. And so the market's no different. It's if you're not careful, it can become an addiction like gambling. And so we want to, and that's why we want to have a community for people where we can be transparent about wins and losses and field these questions, and also talk about it from an honest standpoint versus, get in, everybody, markets. No, it's going to be some emotional side to it. So when you do invest, don't get so caught up in checking the account daily or starting to brag to your friends and family about how much you're making.
Right.
The market's in a positive trajectory right now. Mm-hmm. Like, stay humble, stay cool, because there are ups and downs in the market, and you just have to ride it out. You can't start thinking you're better than the next person because you listened to this live and you invested, or you've been investing before us. It's not one stop shop where it's like, we're good, we're gonna go. Just be human about the way you go about this, and be humble, because the market will rip you up.
And the thing about being humble is there, a lot of people were tooting their own horns and believing their own press right before this drop. The market had reached an all-time high on February 10th was the all-time high, and it tanked since then. It bottomed around I think March 16th was the bottom. But on that rise, people were posting online that they're doing this, they're doing that. They can't be stopped. Follow them. They know what they're doing. And as soon as this happened, my feed got silent. Like, all those people boasting about what they've done, the run Tesla had, they called it, they knew it, all that stopped. And all that was because they were bleeding their own, like Brent said, just be humble, understand these things can happen. And yeah, just, I mean, just you stay even killed. And worst thing to do, and I was talking to a buddy of mine yesterday about this, checking your account every day, looking for these big gains is a way to rip your mind up. I used to do it. And I mean, I think everybody does it, especially when they first get in. But like I said, you got to take a long-term view, you know, at least a year, 3 to 5 years, preferably, if not more. And now if a stock, and I'll go into this later, but I actually have targets that I set for myself for a stock to hit. And if it hits it, I get out. So it can, like, I'm like right now I'm in Norwegian Cruise Line. I have a certain number that I want to hit, and I'm gonna get out. If that happens tomorrow, great. That's quote unquote a day trade. If it happens 3 years from now, okay, cool. I wrote it out. But I always have an out for a particular position when I get in. But it's not a day trade. It's not based on anything. It's only based on if my numbers hit. If it's not hit, I just wait.
Yeah, and so for me, on the flip side, I just buy it and hold it regardless. So
yeah, Brent's a Warren Buffett type.
I don't care what happens because I know my age, I know my life expectancy, and I'm looking at what I want to accomplish over a long term. And unless I buy a specific stock for that purpose, again, you know, we can go around in circles, but it all boils down to know why you bought it, know what you can handle emotionally. And we're going to talk about the emotional side of investing much more than probably anybody else out there, because really that's what's going to help you become a really good investor. It's not you know, just investing in the 1 or 2 picks that we do every week. It's going to be really being an intelligent investor that understands emotions are natural and they'll come with investing, but how to regulate them. That's going to be very important.
Yep.
So with that being said, I got to get over to these children. They are waiting for me. And guys, want to thank you so much. If you can share this, please share this. As soon as we have the Facebook group properly set up, which should be tomorrow or Friday, it should be ready to go. You know, we'll let you know. And then which Saturday we'll start. We'll put a message out there. It might be next Saturday, just to give us some time to prepare properly. So everybody, thank you. Leon, if you got any like 2-second closings.
No, that was it. Yeah, just thanks a lot, everybody watching again. And like Brett said, share this out there, let people know about it. And full transparency is what mainly we're looking at. And like I said, I can't wait till we do that. Start that account.
Yeah,
start tracking.
We'll be back on. These lives will be consistent on Wednesdays, 12 noon. And so, you know, look for us here. We will eventually move these also into the group, but next month at least they will be on this platform. Thank you, everybody. Please share it and like it if you enjoyed the information. Have a good day.
Bye.